take on the first rates?
It's an okay start for the indices, more or less like what we expected because of the global markets and especially the Asian market skews. I think net, if we hold on to that 26,000 mark plus minus 100-point range for the Nifty for throughout the day, that will still be considered as the index consolidating at this current levels, unless the global markets, as we discussed earlier, starts to deteriorate. That's where I would probably believe that the pressure on the indices could start to accelerate. In terms of opening trade, I would look at PSU banking names still as one of the stronger set of the stocks on the pack. Canara Bank is something which I'll highlight at current levels as an opening trade.
Okay, that's Canara Bank and that's a buy, and Kunal clearly has a bias towards the PSBs. But let me now welcome on board Vikash Kumar Jain, India Strategist and Head of India Research at CLSA. And Vikash is joining us on the sidelines of the conference currently underway. Vikash, hi, morning. Great to have you on the show. What's the chatter around India? What's the buzzword that you're picking up at the conference?
Thanks, Aisha. Thanks for having me. It's a pretty busy conference. Of course, the key discussions remain around what happens to India in the middle of this global AI bull run. There is somehow some set of clients who are now finding some interest coming back. They recognize the fact that after the underperformance that we have seen, India has become relatively better value. So some of those positives are obviously getting accepted, but the discussion continues to be on what happens to India in the middle of this global AI bull run. And should it be that if that bull run continues, will India continue to be a market which underperforms? Mind you, it's seen its biggest underperformance from a trailing 12-month perspective over the last 12 months in this century. I mean, if you look at the last 25 years, the underperformance that India has seen versus EM or versus the Asia X benchmark, it is actually the highest we have seen on record. So after that, yes, investors are trying to assess whether it's anyways time to look at India again.
So what is the deduction then, Vikash? I mean, what happens to India? What are the answers like amidst this AI bull run, which is currently underway both in China and the US, I would say? Because while India may not have participated yet in the hardware and software of AI, we're definitely going to be consumers.
See, I think India being a consumer and seeing the benefits of that is something which I'm definitely optimistic in the longer term. But at this juncture, the AI bull run is trying to find who will be the big winners of it. And at this juncture, to argue that case will be a bit too early. So that will not be the reason to suddenly push the bull market in India. However, what is of discussion is that, yes, there is also this worry, very early, I think, but creeping up, or the argument discussions starting whether AI is truly, in bubble territory or not. If that is the case, then you would want to find opportunities which are less dependent on the AI trade. If for people who want to do that, that's where India does fit in pretty well. Our arguments have been that headlines for India were far worse last year. I mean, this calendar year. Particularly from the middle of this year or so, India was seen to be the country to sign the first deal with the US, and it looks like it might very well be close to the last, if not the last. So that created a lot of worry. There was a war-like situation between India and Pakistan, so all of that geopolitics has had its, made headlines turn negative. I think some of that definitely improve. Possibly a trade deal with the US and maybe even with EU is something which we could expect over the next coming months. We've seen one GDP print for the last quarter to be much stronger than estimate. The coming one for the September quarter could be another one which could be a beat. Plus the earnings season seems to be not a bad earnings season so far. I mean as in where the earnings season which has just passed by, and that is also proven by a simple fact that if you were to look at the last 3 earnings seasons, all of those had reasonably bad price action at the market. If you look at Nifty, during the reporting period, it did not do well. This time, that's not been the case. So all in all, there are positives which are emerging. India's relative valuation versus EM is now getting close to its long-term average. Still not there, but almost getting close to that. So on a relative basis, it's not much more expensive than its peers, and some of the headlines are improving. So those are definite positives which come in. Now, whether India is the top rank outperformer or not is simply dependent on whether markets remain quite bulled up and more interested in stretching the AI trade or not. I think that's a difficult one to answer, but nonetheless, with some positives coming in, India definitely comes back into flavor to some extent.
Hi Vikash, morning. This is Harsh here. Vikash, do you expect to see any earnings upgrades, material earnings upgrades, or outperformance in terms of earnings over H2 FY26, or would that be too early to anticipate? Or would that come only in FY27, you expect? Because that is what will likely drive up the returns from here, at least on the index.
Hi, Harsh. We are not in the camp of pushing for big upgrades in earnings and big surprises yet. However, it's heartening to see that the downgrades have come off. Here, I would also want to nuance on which section of the market we are looking at. When we last checked, the small cap and mid cap segment is where expectations are quite high. They are in the range of a 20% plus EPS CAGR. The large cap segment had seen some kind of reasonableness come back in expectations. So I would say not gunning for upgrades yet, but definitely some kind of restraint in terms of downgrades and the pace of downgrades that we've seen should be a relief for the market.
Where within the market do you find valuations comfortable at this point? No real upgrades, and therefore we're closer to the life highs where the index is concerned. I know we've been through a long consolidation, but where is it easy pickings?
See, I mean, on an absolute basis, it is still expensive. India's valuations have been more expensive, only say 10% of the days in the last 20 years or so. So it's not that it's cheap on an absolute basis, but on a relative basis, in a world where other markets have also become expensive, India's relative premium isn't that stark anymore. So that's how one needs to look at. In terms of sectors, we are focused on sectors where we expect headline news flow to remain supportive and tailwinds continuing. For example, in the current kind of inflation environment, it is likely that we see more rate cuts. So that means that rate sensitives could continue to be continue to be seen positively. So that's one area that we like. The government has been pushing consumption, so that those tailwinds might very well continue. So consumption is another area that we like. The third one that is an out of consensus trade of ours is an overweight on IT. That we believe that as headlines around relations with the US improve and people realize that the initial fears around IT are not something that play out immediately, at least, and so from that perspective, there could be a relief rally in IT stocks. That's an out of consensus overweight of ours. So those are some of the areas where we expect performance to be more positive.
Interesting. Vikash, I just want to get back to the entire point about the AI rally, which is playing all over the globe. Now, the interesting thing there is because there's also the chatter about the Mag 7 running ahead of themselves and when that bubble of valuation is going to burst. Having said that, we've seen a little bit of a speed bump last week and even play out overnight tonight. And one is wondering whether this is the beginning or at least early signs of some sort of profit-taking / correction which could play out in the entire tech theme globally. And if that were to happen, what happens then to emerging market flows? Does that money find its way to EMs and then India benefits? Or if US markets fall, India will fall as well. So I'm wondering which camp or which side are you tilted towards?
This is where I believe that we should be careful of what you wish for, and there are 2-3 scenarios that one could paint. One is maybe the whole AI trade goes through a period of simple consolidation where doubts emerge, but it's not really a kind of a big correction. That could be the best situation for India because that's where interest in India would come back without really a lot of nervousness or risk averseness, and that is not completely impossible, but that's something which is the best favored scenario. The more extreme scenario where we see that perhaps there is a bubble burst kind of a scenario where one can keep on arguing. There is a set of investors who would believe that we've not yet seen a bubble and there could be a big melt up before a bubble really plays out. I mean, that's something which is just a set of opinions that everyone can have their own. But if there is a bubble burst kind of a scenario, which means a big pullback in AI stocks, see, that means suddenly there is a lot of risk averseness which comes back. In a situation like that, there's going to be contraction in multiples for all expensive areas of the market. And India is also on an absolute basis an expensive market. Yes, one may argue that India will fall less, but in that kind of a setup, that could be a global correction. And eventually, after recovering from that setup, yes, India could be a favored market. But I mean, that's a slightly long-drawn process. On an absolute basis, it'll be difficult to imagine that India does very well in a global, larger correction if that were to happen.
Yeah, that's quite an interesting take, Vikash. Let's see which way things play out. One can only sort of guesstimate. But tell me, the whole thing about the FIIs turning out from India that began with A, earnings drying up, and B, of course, valuations too were a concern. Where are global investors now when it comes to both earnings and valuation comfort when it comes to India markets?
Yeah, so I think there is a set of long-only investors who have to find opportunities, whatever be the valuations, because that's their mandate. And for them, they're choosing between countries. Now, with the underperformance that India has seen, like I was explaining, the relative worry on valuation is far lesser. So as the relative worry on valuation is far lesser, some of them are starting to take a relook at India, starting to kind of take a nibble. The other set of investors would also treat India as a way of risk management. I mean, on the one hand, you have the AI trade, and it's not just the Max 7 or the large, or some of the Chinese names, but even I would say Korea and Taiwan are linked to that. So that's the AI trade. But if you were to find anything other than that trade, which is why you would have a more diversified portfolio, that's where India is now looking a bit more palatable with that underperformance that we have seen. So that's how investors are looking at it. Now, there is a set of investors who still believe that there is more to go in the AI trade. That set of investor will not really be in a hurry to buy India. But clearly, all of those other arguments have improved as compared to where we were in the last 6-8 months.
And in all of this, Vikash, where do you see what sectors offer the best resilience? Where is it that you play at this point, in your opinion?
Yeah, so I think we need to see. Anyways, we do not really have a lot of AI, direct AI plays in the large cap space. So we should continue to do how you would typically invest in the Indian market, because and if you want to be really leveraged and if you want to take a strong opinion of worries emerging around the whole global AI trade, then the most leveraged anti-AI bet would be the Indian IT space to an extent, because a large part of the worries on that is linked to the fact that maybe the fear that some of their services, there would be lesser demand for that. So if we are calling for a worry on that, then that's the most leveraged bet against that trade. But other than that, you can continue to be involved in the typical rate sensitives and the others which have less to do with this whole global AI thing, but more to do with India's domestic economy and growth.
Vikash, you look more domestic at this hour. You look at more banks, more consumption.
Yeah, definitely more consumption on banks, and particularly on the large private sector banks. I would say that if we expect more rate cuts, then from a timing perspective, we might be still a few months or a few quarters ahead of when most of the NIM compression worries would subside. So from a timing perspective, that might take a little bit more time. But rate sensitives, financials as well as real estate, some of those areas would be the ones which should be more, benefiting more from falling rates.
And the FII flows, Vikash, what direction does that take? Where do you see that go?
So, I think over there, it's the picture should be that we should not see very large sells from FIIs. I do not, and perhaps some small nibbling buys coming in. And that is really where I'm saying that because relative value has emerged, some of them should start looking to come back into India. But the other worry that we have is, which is in terms of competition for flows, is to do with not just FII money, but even domestic money that comes into India, it comes into the equity market. That money has this other area where it is attracting a lot of the flows, which is the secondary space and the primary listing, and the primary and the secondary market new listings and capital raise that we are seeing. That continues to be a very robust market. The activity that we've seen in the last 2 months or so is phenomenal in terms of the number of IPOs, etc. That is sucking out a host of this liquidity, but nonetheless, all of that is creating more listed opportunities for people to look at, and more options should eventually be positive for the market in the longer term.
Oh, yeah, absolutely. In fact, I wanted to discuss that as well, Vikash. I mean, what is it that you're making of the very strong appetite for the new paper? I mean, it's great that the market is broadening too, but the kind of subscription and the valuations that they're coming in at, and still finding takers.
Yeah, so I think this is a situation when you have some kind of a consolidation in the market, no real big correction in the midst of a global bull market. What a global bull market does is it still ensures that sentiment are okay in terms of for the market. And when you're having this consolidation and an uncertain secondary market, then even institutional investors would be happy to find some of these opportunities if they come at a bit of a discount to listed peers, and that's where interest gets generated. So that kind of a mix, which is not an out-and-out bull market everywhere and not an out-and-out bear market everywhere, allows for this situation to continue, which is where IPOs get listed at a price where buyers and sellers can meet. And, that is why this market seems to be a roaring bull market in the midst of an otherwise secondary market, which is at best a consolidating one. So that kind of a dichotomy can very well continue for some time. And, that effectively also means that flows into the secondary market will have their check. So all that I'm painting is a picture which is, relatively bullish as compared to what we have seen in the last 6-9 months. And I've been bearish for nearly about 12 months or so. But that's something which changes because some positives are coming in, but it's not yet a picture where one has to bang the table and expect a massive big up move in the market yet, because there are some of these other arguments of absolute valuations being stretched, flows having a lot of competition, whether it is foreign flows having competition from global AI trade or even domestic flows into secondary market competing with capital raise, which is playing out. So all of that should keep the up move in check, but nonetheless, I think from the margin of negativity that we've seen, we're coming out of that.
Vikash, we leave it at that. Thanks so much for coming in and giving us that perspective. Great chatting, and we will continue to get you, the viewer, the perspective from the CLSA conference, all that's emerging. We're on top of that. We're going to be speaking with a bunch of analysts as well as participants at that CLSA conference all through the day. So stay tuned for that.